So running for the OOs. For a long trade, rule number 1 is we look for the currency pair to rally from the 50 level. So let's imagine 143.50 up to 143.80. Then we would go long at 143.80, and your stop probably 20 to 25 pips, targeting what we call the OO. And then for the short trade, it would be the reverse, which is you want to look for the currency to sell off from the 50 level. So let's say 143.50 example. And basically you want to short at 143.20 in this case. Stop 20 to 25 pips, targeting in this case 143.00. And in this earlier example there, we would be targeting 144.00. So I just want to make sure that everyone can see these rules before I explain them in a bit more detail. Please say yes if you can. So I'm assuming, and please say no if you can't see these rules I just wrote together in this. Okay, wonderful. So let me explain this conceptually for all of you so you can understand it a little bit better. So let's imagine we're on a football field, and 50 is a halfway mark. So the idea here is that let's imagine that, you're on one side of the team and you've got the ball. And I apologize for my crude description of a football game because, I don't watch it often. I'm very good at describing it, but I'm sure you'll understand. So imagine that I've got the ball in my hand. So I've got the ball in my hand. I'm coming from the other side of the halfway mark, from let's say the left-hand side. Got the ball in my hand. I'm coming from the other side of 50. I'm running. I'm crossing the 50 mark, and I keep on running from 50 to 60 to 70. And when I get to 80, the whole idea here is that I've got the ball. I've come from the other side of 50. I've pretty much reached the 80 level, which is 20% to the goal on the other side. And the idea behind the strategy is that given how far I've come, there's a very good chance that I'm going to make it to the goal. So that's where the OO strategy comes from. The goal in this case would be 100. If we're coming from the other side, let's imagine it the other way around. So let's say we're at the right-hand side of the goal. We're on the other side of 50, so maybe we're at 60, for example. We've got the ball. We crossed the 50 mark. So we're going from 50 to 40 to 30 to 20. And then when we're at 20, the idea here is that there's a very good chance that we're going to hit the goal or OO on the other side, which would be 0, 0. So that's where this idea comes from, which is that if we're coming from the other side of 50, if we are so strong that we get to 80, then there's a good chance we're going to hit the figure. So let me show you some examples, and then I'll go through the questions. But the first question I have here is, what position are you playing in the field? And I'll let you imagine it yourself, Boyke. And then in terms of Ghana, do you wait for the candle to close before going? No, this is a price-based strategy. So I would actually put my limit order in pretty much around the 65, 70 mark, targeting, let's say, going long at 80, going for the OO. Is there a time limit for you to run up to the OO? Basically, we trade during the active market hours from 2 to 2, and so they're, as long as it's within the time frame, that's fine. If the order is not triggered by the time, then just cancel it. So let me look at some examples, and then we can go back and answer your question. So let's just look at the euro dollar. This is a dollar Swiss chart, which, we can revisit later. But the euro dollar is what most people like to pay attention to. So let me pull this right up. Okay. Alright, this is the euro dollar chart, and this is a 5-minute chart of the euro dollar. So earlier this morning, we came from the other side of 50, as you can see right here. Whoops, sorry for that. Okay, so we're coming from the other side of 50, and the euro dollar is rallying. It broke above 50, then it goes to 60, goes to 70, it goes to 80. And so it goes to 80, that's where we go long. You could actually, when it goes to 65 or something, or 70, place a limit order to go long at 80. And then if you want to attach your stop and limit orders with it, you can do so as well. And you can see that, actually this one actually was a successful trade. You can see that it did trickle lower a little bit, but it didn't stop us out if our stop was at 60, so our stop would have been here. Let me lay out some arrows for you here. So we would have went long at 143.80. So long at 143.80. Get this font big so everyone can see it. Alright, long at 143.80. Our stop would have been 60 pips, 20 pips below this. So then our stop would have been at 143.60. And then our target would be at BOO. So I'm just going to draw the horizontal line here. Target 144. So this is exactly what the trade looks like. So you would have gone long here. It sells off, and then it rallies targeting the OO. Akija, I'm showing you the most recent example, and we'll go back in the charts. We'll take a look at both positive and negative examples. So this is the most recent example here, where earlier this morning, it rose from below 50 to above 50, which is this mark here, went long at 80, stop here, targeting the OO. Pretty simple. Now, we're also right now looking for the flip scenario, because you saw how the euro dollar fell below 50, came close to hitting 20, but not quite, but I have a limit order to sell the euro dollar at 143.20 in case it gets hit. And if that's the case, I would have stopped at 40, targeting the OO.